What's up everyone, welcome back to my channel. Today I want to talk about the Charles Schwab stock, ticker symbol SCHW. So Charles Schwab stock has fallen nearly 34% last month and is currently trading the lowest level since 2020. It's currently $50, has down from $90 in early 2022. Charles Schwab, if you guys are trading stock, you're very familiar with it. It's one of the largest broker-dealer in US, and it also have other financial services including banking, investment advice. So in terms of the company scale, Charles Schwab currently have 33 million active brokerage account and 2.4 million corporate retirement plan participants, meaning that if the company provide 401k to their employees, they could open account in Charles Schwab. And they also have 1.7 million banking account. Currently, the market cap of Charles Schwab is 90 billion, which is the same size as Goldman Sachs, similar size as Goldman Sachs and Morgan Stanley. So why the stock has dropped so much in the past months is because of the bearish opinion from the analysts from Morgan Stanley, and the analysts concerned about the client overflow and also the potential of losing from the rising interest rate. So according to Morgan Stanley analyst, Charles Schwab have seen a rate of capital outflow of around $20 billion per month, which is twice as expected because of the banking crisis starting with the SVB. A lot of customers are concerning about safety of their deposit, and they are moving the cash out to a safer place. So the analysts also mentioned that Charles Schwab has invested heavily in the long-dated bonds, which are now losing value as interest rate is keeping going up. And they are not confident about the situation will improve in the near term as the Fed is keeping going, as the Fed is going to keep adding interest rate. So as we can see that for Charles Schwab, although their business is very diversified, one of the largest revenue source is from income, as a lot of their big clients are moving their capital out of Charles Schwab. The company are losing in that part of the revenue. And also in the recent past years, because of the $0 commission from trading, the company has also have to give up that part of the revenue that they had before. And in terms of the company's profitability, moreover, we know that Charles Schwab has acquired TD Ameritrade 2 years ago, and they are slowly integrated TD Ameritrade accounts into their own platform. And although TD do bring a lot of accounts to Charles Schwab, but since there's zero commission for stock trading, there is still doubt that whether this acquisition will worth the capital invested. On the other hand, there's also some bullish point about Charles Schwab, and a lot of people think that the company has a good reputation, and it's founded by Charles Schwab, and through the years the company has played a very differentiated position in the financial services market. And one of its unique point is that it's first lower in interest rate and has grown their user base very fast after that. And I think another competitive advantage of Charles Schwab is that they have relatively lower cost comparing with other companies, and they can cross-sell the different products to their customers once the customers are in their ecosystem. So at the end of 2022, Charles Schwab oversees more than $7 trillion in their client assets, positioning as one of the most prominent companies in the US that specialize in security trading and wealth management. So I think the larger user base and also the economic scale they can have with a lower cost of acquiring customers or lowering costs by selling their customer more products will definitely be a competitive advantage that other companies are hard to compete. And when we are looking at the PE ratio right now, the current is around 14, which is low comparing with the company's historical level. And when we are looking at when we are comparing the PE ratio with the industry, when we are comparing the Schwab's PE ratio with the industry average, it's also on the lower end. Although there's a lot of bullish opinion about Charles Schwab, about its long history and good reputation, at the current price, it seems very attractive to buy the dip, as the stock is probably undervalued. But for me, I will not buy the dip for now, because I think for this industry, the company could build a reputation over the years, but the product and services they provide to their retail customers is really hard to differentiate. When the users come to the platform, they do the trading or wealth management and what the users needs. And so as an investor myself, I find there's no really big difference between different trading platforms. And I think for the wealth management part, as there's more and more robo-advisor, the financial advisor is slowly replaced by the robo-advisors. And I doubt that whether in the future Charles Schwab could sustain the growth if they don't have any innovations. I think through non-undifferentiated product and service, it's really hard for them to. It can really hard for them to achieve organic growth if they are not doing more M&A in the future. And for the end users, as investors or traders, the switching cost is very low. You can just close your brokerage account and switch to another one if their promotion is more attractive or if they have more unique functions. So in a word, I think Schwab is a leading position in this industry, and they have a large customer base, and their management has been achieved the company's growth through the years very steadily. But at current level, I will not invest in Charles Schwab. But I think it seems that the banking crisis has also expanded to other financial service industries, and I think as an investor, we should be cautious about this uncertainty in the market and the possible volatile stock price. So that's all about Charles Schwab stock. Thank you guys for watching, and I will see you in my next one. Bye!